Question 1. What is the primary function of insurance in risk management? A. To increase the risk exposure of policyholders. B. To transfer the financial risk from the insured to the insurer. C. To reduce the probability of loss for policyholders. D. To eliminate all forms of financial risk. Answer. B. To transfer the financial risk from the insured to the insurer. Explanation. The primary function of insurance in risk management is risk transfer. Insurance allows individuals and businesses to transfer the financial burden of potential losses to an insurance company in exchange for a premium. This protects policyholders from bearing the full cost of loss, whether it be from accidents, illness, or damage to property. The idea is not to eliminate risk, but to mitigate its financial impact. Option A is incorrect because insurance does not increase risk exposure, it reduces it. Option C is incorrect because insurance cannot entirely eliminate risk but can reduce the financial consequences of losses. Option D is incorrect as no insurance product can eliminate all financial risk. Question 2, scenario-based. Mr. Williams is a Louisiana resident who recently purchased an auto insurance policy. After a minor accident, he files a claim, but the insurance company does not respond within the required time frame. What should Mr. Williams do according to Louisiana law? A. File a complaint with the Louisiana Department of Insurance (LDI). B. Ignore the situation and wait for the insurer to respond. C. Contact the insurer's legal department and demand a payment. D. File a lawsuit without contacting the insurer. Answer A. File a complaint with the Louisiana Department of Insurance (LDI). Explanation. In Louisiana, under the Fair Claims Settlement Practices Act, insurance companies are required to acknowledge and respond to claims within a certain time frame. If the insurance company fails to meet these deadlines, the insured, in this case Mr. Williams, can file a complaint with the Louisiana Department of Insurance (LDI). This regulatory body oversees the actions of insurers to ensure compliance with state laws, and filing a complaint with them is a necessary step for resolving the issue. Option B is incorrect because passive waiting is not an appropriate response. Option C is incorrect because the issue should first be addressed through proper channels, not through direct legal action. Option D is incorrect because taking legal action immediately without addressing the insurer's non-compliance first is premature and may not be necessary. Question 3. Which of the following best describes the underwriting process in insurance? A. The insurer adjusts the policy premiums after claims are made. B. The insurer evaluates risks and determines the terms of coverage and premiums. C. The insurer reviews the insured's claims history during the claims process. D. The insurer provides policies without assessing the insured's risk level. Answer B. The insurer evaluates risks and determines the terms of coverage and premiums. Explanation. Underwriting is the process by which an insurer evaluates the risks associated with an individual or business seeking coverage. The insurer assesses the applicant's risk level based on various factors such as health, property conditions, and claims history, and then determines the terms of coverage, including the premium amount. The goal is to ensure that the insurer charges an appropriate premium based on the level of risk. Option A is incorrect because premiums are typically determined during underwriting, not adjusted after claims are made unless the policy terms allow for adjustments. Option C is incorrect because claims history is reviewed during the underwriting process, but not specifically for determining the claims settlement, which is a separate part of the process. Option D is incorrect as underwriting ensures that the insurer does not provide policies without assessing risks, which could lead to financial loss. Question 4. Which of the following is true regarding the Louisiana motor vehicle insurance law? A. Louisiana law mandates that all motor vehicle policies must include personal injury protection (PIP) coverage. B. Liability coverage is optional for all motor vehicle policies under Louisiana law. C. Louisiana law requires minimum liability coverage for bodily injury and property damage. D. Comprehensive insurance is mandatory under Louisiana law for all vehicles. Answer. C. Louisiana law requires minimum liability coverage for bodily injury and property damage. Explanation. The Louisiana motor vehicle insurance law mandates that all vehicle owners must have minimum liability coverage for bodily injury and property damage. This includes a requirement for a specific amount of bodily injury liability, usually $15,000 per person, and $30,000 per accident, and property damage liability, usually $25,000. Option A is incorrect because personal injury protection (PIP) is not mandatory in Louisiana. Option B is incorrect because liability coverage is not optional but required by law. Option D is incorrect because comprehensive coverage is not mandatory in Louisiana. Question 5. Which of the following insurance clauses is typically used to exclude certain types of coverage under an insurance policy? A. Declarations. B. Insuring agreement. C. Exclusions. D. Conditions. Answer: C. Exclusions. Explanation: exclusions in an insurance policy are provisions that limit or eliminate coverage for specific types of losses or events. These clauses specify what is not covered under the policy. For instance, many policies exclude coverage for certain natural disasters or losses caused by criminal activity. Option A is incorrect because declarations provide information about the policyholder, premium, and coverage, but they don't exclude coverage. Option B is incorrect because the insuring agreement outlines what is covered, not what is excluded. Option D is incorrect because conditions describe the requirements that must be met for the policy to be valid, but they do not exclude coverage. Question 6, scenario-based. Ms. Harper has recently purchased a homeowner's insurance policy in Louisiana, but her home is severely damaged by a flood which is excluded under the terms of her policy. What should Ms. Harper do to ensure she is properly covered in case of future flood damage? A. Purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP). B. Increase her property insurance coverage to include flood damage. C. File a complaint with the Louisiana Department of Insurance for flood coverage. D. Rely on the homeowner's insurance policy as it covers all water damage. Answer A. Purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP). Explanation: flood damage is typically excluded from standard homeowners insurance policies in Louisiana, and the National Flood Insurance Program (NFIP) offers separate coverage for flood-related risks. Ms. Harper would need to purchase additional flood insurance through the NFIP to ensure coverage for future flood damage. Option B is incorrect because standard property insurance cannot include flood coverage unless it is specifically added, which would typically require a separate policy. Option C is incorrect because the Louisiana Department of Insurance does not govern flood insurance coverage as it falls under federal regulations. Option D is incorrect because flood damage is generally excluded from standard homeowners insurance. Question 7. Which of the following is not a requirement for an insurance agent to obtain? A license in Louisiana. A. Completion of pre-licensing education. B. Passing the Louisiana Insurance Producer Exam. C. Maintaining a minimum level of professional liability insurance. D. Submission of fingerprints for a criminal background check. Answer: C. Maintaining a minimum level of professional liability insurance. Explanation: in Louisiana, an insurance agent must complete pre-licensing education, pass the Louisiana Insurance Producer Exam, and submit fingerprints for a criminal background check as part of the licensing process. However, maintaining professional liability insurance is not a requirement to obtain a license, though it may be recommended or required by some employers or agencies. Option A, B, and D are all correct licensing requirements under Louisiana law. Question 8. What is the primary purpose of the Louisiana Fair Claims Settlement Practices Act? A. To define the specific claims process for various types of insurance policies. B. To set standards for insurance company reporting requirements. C. To ensure timely, fair, and equitable treatment of policyholders during the claims process. D. To regulate the types of insurance policies offered in Louisiana. Answer: C. To ensure timely, fair, and equitable treatment of policyholders during the claims process. Explanation: the Louisiana Fair Claims Settlement Practices Act ensures that insurance companies treat policyholders fairly and in a timely manner during the claims process. It sets standards for the prompt acknowledgement, investigation, and settlement of claims, thus protecting consumers from unjust practices by insurers. Option A is incorrect because the Act does not define the claims process but focuses on fair practices in claims handling. Option B is incorrect because the Act does not primarily deal with reporting requirements but with fair treatment during claims. Option D is incorrect because the Act does not regulate the types of insurance policies offered. Question 9. Which of the following types of insurance is specifically designed to cover losses resulting from negligent acts of directors and officers in a corporation? A. General liability insurance. B. Workers' compensation insurance. C. Directors and officers (DO) liability insurance. D. Professional liability insurance. Answer: C. Directors and officers DO liability insurance. Explanation: Directors and officers DO liability insurance is specifically designed to cover losses that result from the actions or decisions made by directors and officers of a corporation. This policy helps protect these individuals against lawsuits related to alleged negligence, breaches of duty, or errors made while managing the company. Option A is incorrect because general liability insurance does not cover the actions of directors and officers specifically. Option B is incorrect because workers' compensation covers injuries or illnesses to employees, not the actions of directors or officers. Option D is incorrect because professional liability insurance typically covers professionals like doctors or lawyers, not corporate directors and officers. Question 10. Which of the following is considered an unfair trade practice under Louisiana insurance law? A. Advertising the availability of a new type of coverage. B. Using misleading statements in advertisements or during the sales process. C. Offering discounts for multiple policies purchased by a single customer. D. Providing discounts to policyholders who renew their insurance. Answer: B. Using misleading statements in advertisements or during the sales process. Explanation: Under Louisiana insurance law, using misleading statements in advertisements or during the sales process is considered an unfair trade practice. Misleading advertising can deceive consumers and lead them to make decisions based on incorrect or incomplete information. Option A is incorrect because advertising the availability of new coverage is not inherently unfair as long as it is accurate. Option C is incorrect because offering discounts for multiple policies is a common and accepted practice. Option D is incorrect because offering renewal discounts is also permissible and a common marketing strategy. Question 11. Which of the following best describes a covered claim under Louisiana's insurance laws? A. Claim resulting from intentional damage. B. Claim made by policyholder after the policy has expired. C. Claim for losses caused by natural disaster that is not covered by the policy. D. Claim for losses that are covered by the terms of the insurance policy. Answer: D. A claim for losses that are covered by the terms of the insurance policy. Explanation: A covered claim refers to a claim for a loss or damage that is explicitly covered under the terms and conditions of the insurance policy. It does not include claims for intentional acts, claims made after policy expiration, or exclusions like certain natural disasters unless specifically covered. Question 12. What is the maximum period that Louisiana insurance companies can take to acknowledge a claim after receiving notice of loss? A. 15 business days. B. 30 business days. C. 60 business days. D. 90 business days. Answer: A. 15 business days. Explanation: Under the Louisiana Fair Claims Settlement Practices Act, insurance companies must acknowledge the receipt of a claim within 15 business days of receiving notice of loss. This requirement ensures that policyholders are informed about the status of their claim in a timely manner. Question 13. What is the minimum amount of liability insurance coverage required for bodily injury in Louisiana? A. $10,000 per person and $20,000 per accident. B. $15,000 per person and $30,000 per accident. C. $20,000 per person and $40,000 per accident. D. $25,000 per person and $50,000 per accident. Answer: B. $15,000 per person and $30,000 per accident. Explanation: Louisiana law requires that drivers carry a minimum amount of liability insurance for bodily injury. $15,000 for injury to one person and $30,000 for injury to more than one person in a single accident. This is part of the state's mandatory minimum coverage for auto insurance. Question 14. Scenario-based. A homeowner's insurance policy in Louisiana excludes flood coverage. Which of the following is the best option for covering flood damage? A. Rely on the National Flood Insurance Program (NFIP). B. Purchase separate water damage policy. C. Modify the homeowner's policy to include flood damage. D. File claim under the homeowner's insurance policy as water damage. Correct answer: A. Rely on the National Flood Insurance Program (NFIP). Explanation: Flood coverage is typically excluded in standard homeowners insurance policies in Louisiana. The best option for obtaining coverage for flood damage is to purchase a separate flood insurance policy through the National Flood Insurance Program (NFIP), which is specifically designed to cover flood-related losses. Question 15. Which of the following statements about Louisiana's unfair trade practices and laws regarding insurance is true? A. Insurers may misrepresent policy benefits and limitations as long as they later provide a disclosure B. It is legal for an insurance agent to discuss policy terms with clients without a written agreement. C. It is an unfair trade practice to offer insurance coverage without disclosing exclusions. D. Insurers are not required to notify policyholders of changes in their premiums. Correct answer. C. It is an unfair trade practice to offer insurance coverage without disclosing exclusions. Explanation: Louisiana law prohibits the misrepresentation of policy terms and requires insurers to fully disclose exclusions. Offering coverage without clearly stating the exclusions can be deemed an unfair trade practice, as it may mislead consumers into believing they have more coverage than they do. Question 16. In Louisiana, an insurance policyholder must report a loss within how many days after the occurrence of a loss? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer: B. 10 days. Explanation: Louisiana law requires that policyholders report a loss to their insurer within 10 days after the occurrence. This ensures that the insurer is promptly notified and can begin the claims process, which is crucial for timely settlements. Question 17. Scenario-based. If an individual in Louisiana accidentally causes damage to a neighbor's property, which type of coverage would help the individual cover the costs of the damage? A. Personal injury protection. B. Liability coverage under homeowners insurance. C. Collision insurance. D. Comprehensive insurance. Answer: B. Liability coverage under homeowners insurance. Explanation: liability coverage under homeowners insurance would typically cover damage caused to another person's property. If the damage was accidental, this insurance would provide financial protection for the policyholder. Personal injury protection, PIP, collision, and comprehensive insurance generally cover other types of risks. Question 18. In Louisiana, how long must an insurance company maintain the records related to a claim after the final disposition of the claim? A. 1 year. B. 3 years. C. 5 years. D. 7 years. Answer: B. 3 years. Explanation: Louisiana law requires insurance companies to maintain records related to claims for at least 3 years after the final disposition. This allows for proper auditing in compliance with state regulations and provides a basis for resolving any future disputes related to the claim. Question 19. Which of the following situations would not be covered under a standard homeowners insurance policy in Louisiana? A. Theft of personal property. B. Damage to the structure caused by fire. C. Damage from flood. D. Liability for injuries occurring on the property. Answer: C. Damage from a flood. Explanation: flood damage is typically excluded from standard homeowners insurance policies in Louisiana. To cover flood damage, homeowners would need to purchase a separate flood insurance policy through the National Flood Insurance Program and FIP. The other situations, such as theft, fire damage, and liability, are generally covered under standard homeowners insurance policies. Question 20. Scenario-based. A Louisiana insurance agent is found to have intentionally misled a client about the benefits of a policy. Which of the following is the most likely consequence for the agent? A. The agent will receive a warning from the Department of Insurance. B. The agent's license may be suspended or revoked. C. The agent will be required to refund the premium to the client. D. The agent will be required to undergo additional training on ethics. Answer: B. The agent's license may be suspended or revoked. Explanation: intentionally misleading clients is serious violation under Louisiana's insurance regulations. In such cases, the Louisiana Department of Insurance may take disciplinary action, including suspending or revoking the agent's license. The other options A, C, and D may be possible, but they are less severe than the revocation of the license. Question 21. What is the primary purpose of Louisiana Citizens Property Insurance Corporation? A. To provide coverage for high-risk properties in the state. B. To offer low-cost insurance policies to senior citizens. C. To handle insurance claims for natural disasters. D. To manage the state's insurance fraud investigations. Answer: A. To provide coverage for high-risk properties in the state. Explanation: the Louisiana Citizens Property Insurance Corporation is a state-run program designed to provide property insurance coverage for homeowners in high-risk areas where private insurers are unwilling to provide coverage. This program helps protect homeowners in areas vulnerable to hurricanes and other natural disasters. Question 22. Which of the following is A requirement for an insurance company to operate in Louisiana. A. They must have been in business for at least 10 years. B. They must be licensed by the Louisiana Department of Insurance. C. They must only offer life insurance products. D. They must have their headquarters in Louisiana. Answer: B. They must be licensed by the Louisiana Department of Insurance. Explanation: to operate in Louisiana, insurance companies must be licensed by the Louisiana Department of Insurance. This ensures that companies meet state regulatory standards and are authorized to offer insurance products to residents. Question 23. Which of the following is considered an unfair trade practice under Louisiana insurance laws? A. Offering a policy at a discount to new customers. B. Failing to promptly pay claims without proper investigation. C. Providing a written disclosure of exclusions in the policy. D. Advertising a policy with the correct coverage limits. Answer: B. Failing to promptly pay claims without proper investigation. Explanation: under Louisiana's insurance regulations, it is considered an unfair trade practice for an insurer to fail to promptly pay claims without proper investigation. Insurers must investigate claims fairly and settle them promptly as required by state law. Question 24, scenario-based. A Louisiana insurance agent receives a commission for selling a new life insurance policy. The agent later realizes that the policyholder was not informed about a critical exclusion. What is the likely consequence for the agent? A. The agent will receive a reduced commission. B. The agent will be required to refund the commission to the insurance company. C. The agent will lose their license for a violation of state law. D. The agent will only be required to issue an apology to the policyholder. Answer: B. The agent will be required to refund the commission to the insurance company. Explanation: if an insurance agent fails to properly inform a policyholder about a critical exclusion, this is considered a violation of state law and can result in the agent being required to refund the commission to the insurer. This is because agents are expected to fully disclose all relevant information about the policy. Question 25. What is the minimum period of time that an insurer must allow policyholders in Louisiana to cancel a policy for a full refund of premiums? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer: B. 10 days. Explanation: under Louisiana law, policyholders have a minimum of 10 days to cancel a policy and receive a full refund of premiums. This period is known as the free look period, and it allows consumers to review their policies and cancel if they are dissatisfied. Question 26. Which of the following is the primary purpose of the Louisiana Insurance Guarantee Association, LIGA? A. To regulate insurance companies' rates. B. To pay claims for insolvent insurers. C. To assist in the marketing of insurance products. D. To educate the public on insurance fraud prevention. Answer: B. To pay claims for insolvent insurers. Explanation: the Louisiana Insurance Guarantee Association, LIGA, provides protection to policyholders in the event that their insurer becomes insolvent. It helps pay claims and ensures that consumers are not left without coverage when an insurer is unable to meet its obligations. Question 27. In Louisiana, an insurer is required to provide a policyholder with a written explanation of which of the following after a claim is denied. A. A list of the insurer's competitors. B. The reason for the claim denial and any applicable policy provisions. C. A recommendation for legal counsel. D. A voucher for alternative insurance coverage. Answer: B. The reason for the claim denial and any applicable policy provisions. Explanation: when a claim is denied, Louisiana law requires the insurer to provide the policyholder with a written explanation outlining the reason for the denial and the specific policy provisions that led to the decision. This transparency helps ensure that the policyholder understands why the claim was not paid. Question 20. Which of the following types of insurance is not required by Louisiana state law? A. Auto insurance. B. Homeowners insurance. C. Workers' compensation insurance. D. Flood insurance. Answer: D. Flood insurance. Explanation: flood insurance is not a requirement under Louisiana state law. However, auto insurance, homeowners insurance for those with mortgages, and workers' compensation insurance are mandatory in certain circumstances. Flood insurance is optional but highly recommended due to Louisiana's vulnerability to floods. Question 29, scenario-based. A Louisiana Homeowners insurance policyholder is notified that their premium will increase due to a higher risk of natural disasters. Which of the following must the insurer do? A. Provide written notice at least 60 days before the premium increase. B. Inform the policyholder about all of the exclusions in the policy. C. Offer the policyholder an option to switch policies to lower the premium. D. Give the policyholder a 10-day grace period before the increase takes effect. Answer A. Provide written notice at least 60 days before the premium increase. Explanation. Under Louisiana law, insurers must provide policyholders with written notice at least 60 days before a premium increase. This allows policyholders to adjust their coverage or explore other options before the change takes effect. Question 30. Under Louisiana law, which of the following is true about the subrogation process in insurance? A. Subrogation allows the insurer to deny a claim if the policyholder is found at fault. B. Subrogation allows the insurer to recover payment from a third party after compensating the policyholder. C. Subrogation allows the insurer to cancel a policy after a claim is paid. D. Subrogation is not allowed for liability claims. Answer B. Subrogation allows the insurer to recover payment from a third party after compensating the policyholder. Explanation. Subrogation is the process by which an insurer, after compensating the policyholder for a covered loss, can recover the payment from the third party responsible for the loss. This ensures that the responsible party is held financially accountable